Alright, so this is going to be the trade review for the live stream on 20th of February. And this is one of the examples of peak frustration. So let's get over to the charts and you understand what I meant. And let me just log into the TradeOvid account. Okay, and then right now let's jump over into the charts. So my analysis was that I was bearish for Thursday, and I was looking for Friday's low right here. Okay, now I was trying to short inside this 1 hour fair value gap, but as you can see right here on the 1 hour time frame, it pretty much chopped me out. Okay, on hindsight, yes, I could have just utilized this proportion order block and everything would be fine, but you know, I strive for getting the best entries and stuff like that, so I wasn't too happy that price is running against me in a way whereby I could be wrong, because on the previous day when price ran against the invalidation, the soft invalidation, and I closed out my positions initially to cut the losses, I was correct on that move. Right here, doing the same thing, I was somehow proven wrong, because if I did not manage the position, it would have been a profitable trade. Okay, because my stops were up here. Alright, so jumping down into the 5 minutes, you will see what I mean. I was trying to short this fair value gap right here, which was previously utilized to send the price lower. When we closed out below, we formed this fair value gap, and price did not extend up or did not trade back into this fair value gap before dropping lower. So during the London, price came back up. I got in short right here at this candle 455, and then the very next candle we closed above the inversion fair value gap, drawing all the way into the daily opening price. So this was the candle that I got out at, because we closed above the inversion fair value gap right here. So because of this, prices whacked around, consolidated, and then even the 8:30 news did not provide any form of directional move. Eventually it was the 9:30 that formed the turtle soup high right at the very end of this inefficiency before the invalidation point. So the invalidation point was this this up close candle here, which was a bearish order block. So the price reached up all the way into this volume imbalance to fill up every inefficiency possible on this way down right here, as you can see, right at 9:30, and then it dumped lower. So moving forward, I am just going to avoid such a trade setup right here, whereby I try to finesse my entry between the daily open and the midnight open, because I just want to keep things simple. So I have annotated another requirement is that price must trade a minimum of 1 standard deviation above Asia's range, or below, above Asia's range if I'm bearish, and below Asia's range if I am bullish, in order for me to look for a setup. Okay, so how do I define the Asia range? I go on to the 1 hour time frame, and I drop the fibs on the bodies itself of Asia's range. Why is it not showing? Too much indicators perhaps, but anyways, so 1 standard deviation, let's just use yesterday as an example. So from the body's high on the 1 hour time frame to the body's low, 1 standard deviation is required before I look for a long entry to attack Asia's high, and Asia's high must be left open if I were to be bullish. So same thing right here, how when I was bearish, Asia's low was left open, we traded above, and then when we use the fibs, there was a 1 standard deviation right here. Alright, so down here as well, a minimum of 1 standard deviation. It doesn't matter if it goes to 2, because if it goes to 2, it's not going to show a change in the state of delivery on the 50 minutes, right? So it's just going to melt down into 2. So another example would be here on Thursday, same thing, at least a 1 standard deviation. In this case, it reached all the way down into the 2 standard deviation before offering a buy entry, before printing my bottle essentially. Okay, on Friday on the other hand, it did not provide the 1 standard deviation, and at the same time it traded above Asia's high first. Okay, so this will invalidate the setup for today, for that particular day if I'm bullish. Right, so for today, an example would be, because I'm bearish, I would require price to stay above Asia's low and then trade above Asia's high, at least 1 standard deviation from the range here, in order for me to go short. And because it refuses to offer that, and if it offers that, then it basically invalidates the entire setup, it also means that I can't trade for today. Make sense? So moving on, I'll show you some more examples here. Right, so over here on Tuesday, same thing, we left Asia's high, we traded below at least 1 standard deviation before the reversal higher, and then right here on Friday, we're looking to seek to print the high of the week, at least 1 standard deviation before any move lower. Okay, I think I'm just going to stick to these 2 requirements and then frame my entries accordingly with the PD arrays, and that should be more than enough to satisfy the monthly targets in terms of profits, and the statistics should improve. Alright, and with this, it's going to be the end of the review. I hope you enjoyed this, and looking forward to tomorrow. I'm gonna see how it prints here. If everything's going well, we should have a bullish Friday. So looking back at the daily candle, yeah, we are reaching into the fair value gap right here from low to high. At least tagging this level would be better in terms of risk. Not risk, but in terms of the dealing range, but it needs to do it in a really fast manner. Right, and anyways, if you have watched the live stream, you would have heard me mention that because we have traded 2 candles within this green candle, it is a inside candle. The 3rd candle, if it does not provide the displacement, the 4th candle needs to displace below this low here, over here. So right here, after 9:30, it only took 30 minutes before the close of this candle, which is at 10 a.m. So how perfect is that? Right, anyways, that's pretty much it, and I'll talk to you again.